Hey friends, Leo here, and today we're going to take a look at Bitcoin. Um, if you haven't already, please like and subscribe. Really helps me stay motivated to keep making these videos for y'all. Trying to get to 500 subscribers. I think I'm at 438 or something like that. But anyway, without further ado, I'm going to go ahead and jump in here. Um, so it looks like we're having a little bit of a breakout on Bitcoin. Now, the big thing to keep in mind with breakouts are that breakouts often fail. Shocker. Um, what often happens with traders is that, actually, this is a really good example. So if you look here, probably do something like that. Actually, I'll just drag it the whole way. There we go. And go ahead and bring it down. And so what I'm looking at here are the candle body closes as to where I'm drawing my channel. This one really isn't that great on the low side as far as a consistent support. It's kind of choppy in there, but you get the idea of what I'm doing. So it gets this big move up, and then it moves into a range. Well, so look what happens here. Prices come down, starts to fool some traders, and maybe people start shorting here, only to get pushed right back into that range. Right about, after about 3 touches, it's very obvious what's happening is that we have a range here. And that's why the candle body closes are so important, because you can see that wick there. I guarantee you a lot of traders got trapped to the upside thinking that that's a breakout, and the same exact thing happened here. You got people market buying, market buying, market buying, and then it stops. You can see that prices on these candles, price went up and then it got pushed back down, and then the next day, boom, big red candle, and then they were all getting stopped out, which drove the prices back down. People are thinking, oh, okay, the market's gonna, it's gonna crash. So it starts breaking out the lower side of this little range, and then it doesn't happen. So it starts coming back up, getting above that 21 EMA, and now once it gets above here, they're like, oh, we're going to new highs, we're going to 20K, and so then they get trapped again, and then sellers come in and drive it back down. So that's why I say breakouts fail more often than not. So they're just really not worth it to trade. And that's pretty much what's happening here, as we're running into a little bit of a kind of a breakout type area. Let's zoom out a bit. See bigger picture where we are. So I'm going to come right about, you could do it there, I think. I'm going to make that blue so y'all can see what we're looking at. But what I'm really looking at here is the candle body closes. You can see you get a lot of touches here, a lot of touches, but it's getting rejected down. And as we come back up to test it here, people are thinking, oh, Bitcoin is about to break out, we're going to skyrocket. Now, I'm not saying it's not going to do that. It could. What I'm saying is that it is a losing proposition to FOMO in whenever you see a breakout type play appearing. It certainly could break out, and we go and break this high here. But I don't really like that, to be honest. I'll get into that into a minute. Another thing that, actually no, I do like that dotted line. So, kind of bigger picture here, what I want to look at, because I'm not really talking about trying to day trade it right now, but bigger picture, if y'all haven't seen this video, go back and check it out. It talks about my lengthening, how I think that it's going to take longer for this bull market to play out. As you can see, each of these cycles is getting longer, and I don't really buy into the whole, what do you call it, the halving is causing these pump things. I think it certainly adds to the value of Bitcoin because it's becoming more scarce, but I don't necessarily think that that's what's driving these bull runs. I mean, you can just see it here. Look how short this one is. It lasted 728 days, and this one lasted 1,000. I mean, come on. um, Look at the how long the bear market lasted. Look how long this bear market lasted. It's getting longer, longer, and longer to play out. Anyway, so what I'm expecting is, March 2023. That's where I think that we're going to have our peak. So a big breakout here could happen, pushing us to could get as high as 16,000. I mean, hell, it could test 20K. I don't think that's likely because we've already come up quite a bit. But what's more likely is to just consolidate, essentially. Consolidate, slowly grind higher, slowly grind higher. And if you look here, what I have is this little fractal pattern, which I pulled from the prior bear market, which is pretty much what I'm expecting to happen. We're just going to move sideways, eventually get a pop. And that's exactly what happened over here. So, if you look at this bear market, we bottomed. We kind of had this double bottom formation, which is exactly what we've had here on Bitcoin. There's your first bottom, come up, double bottom, got that nice big wick, just like over here. And then we've gotten above the EMAs. Excuse me. Need some more coffee, I think. And then we just kind of, popped, consolidated, popped, kind of consolidated. And then it really wasn't until 2017 where it really just got stupid and started taking off. And really, once we broke the prior bear market all-time high, or bull market all-time high, excuse me, that's whenever things really just got stupid, but they ended pretty quickly. So I'm expecting that to happen. I'm expecting a continuation of the slow and steady growth until we finally grind up. Let's see here. Trying to figure out. I mean, I don't think, honestly, I think fall 2021 would be the soonest that we would see us breaking all-time highs. I just don't see it happening here. I think that would just be too quick, too parabolic, too soon. I think it's going to be a slow and steady consolidation, grinding our way up until we get past that all-time high, and then things can get stupid. Then we can break 100K and get into six figures. But until then, it's just going to be a slow grind. Even if we do pop up here, I think we'll get rejected pretty quick. I think we'll see the wicks like we did here, but that's a very bullish confirmation because we have our high, right? Now we've made a higher low. Now we put in a lower high. We have our higher low, and now even if we wick through, even if we wick past that high there, that's a new higher high from the low. So that's very good for the bulls. And that's probably what's going to end up happening is you get a little pop up. I'm not saying it's going to happen now. We could consolidate more and then pop up some spring or summer. But I don't think we're just going to start rocketing. Just got to be patient. It's a marathon. Investing is about buying into companies or, in this case, crypto that looks very promising and holding and just being patient. So let's go ahead and jump back over to the other chart. So I'm thinking that once we do see the pop, whenever it may be, I think that we could get up to 17,000 because that's whenever we start to see some structural resistance. There's not a whole lot of price acceptance from the 17.2 to all-time high levels. As you can see, we weren't there for long. We were there for a couple of days and then we got smacked back down. So I don't think that a test of the all-time high is likely. I think it's much more likely we test the 17K range or the just under the 16K range before coming back down. So I think that's something to look for. But looking for where your support is, I think that the lowest we could possibly see ever again would be the around 9K. And I don't even think that's likely because let's look at 55 EMA on the 1 week chart is at 9.3. So I mean, I don't expect it to ever break the 55 EMA on the 1 week during this bull run. So think of that as kind of a trailing support level. I think that's the lowest that it could possibly go, and I would be surprised if we get there more than once. If you look over here to the prior bull runs, I mean, we just don't get there. We kind of got there on that run, that little dump, but not really. I mean, you're still a little ways off of it. So that acts as a very good support the entire time. And so if you kind of imagine what it's going to be doing going into the futures, we'll probably drift up here and then kind of pop, and it'll just kind of keep acting as a support the whole way. So kind of that 9.3 to where we are is just a range. It does have an upward bias to it, so I would expect kind of us staying to the upside of it. So probably above this 200 EMA on the 1 days to be watching as well. But I think that's pretty much all that I have. I just want to kind of get a big picture of where we are, where we could be going, which is these two green lines up here, and where our resistance is. Pretty much once we get past these levels, I mean, keep in mind whenever I say past, we can wick up here multiple times and nothing really happened. That's the thing about breakouts, that happens. I mean, look, right here, we kind of wick through that support or resistance area, came back down, wick through it, came back down, wick through it, came back down, and then look, wick through, wick through, wick through, wick through. That's why breakouts are just not a profitable position to be taking. They fail. They fail very often. And the only way that they work is if you get an extremely high risk to reward. But that's, that if you're going into trading with the mindset that, oh, well, if I take this one little trade here, I've got 100x risk to reward. Okay, sure, that's great. But the higher your risk to reward, so like if you have 100x to 1, well, it's very unlikely that you're going to get that 100x. I mean, you might have a 0.1% chance of getting it. That's why all these people that go out and buy all these random altcoins that are garbage, they lose money because they're garbage. I mean, they're nothing. They're foo-foo. They're fairy dust. They have nothing behind them, really. Some of them might, but it's not something to... Don't justify your trading just because, oh, well, I have a great risk to reward. That doesn't matter. What matters is something that's consistent. I mean, if you have a strategy where you're consistently able to pick altcoins that are able to pump, and you get, say, a 3x return or 10x return even, great. But I mean, it's just breakouts fail so frequently. It's just not worth it to trade them. Now, if you get a breakout and a retest, that's different. That's something for another video. But just breakout in general, and what I mean is like, okay, well, you got a market buy order right there. You're just getting trapped. You're filling somebody else's shorts. What's happening is, you have. Let's say that this is your order, right? You got your buy order right there. We're going to make it green for illustration purposes. What's going to happen is they see that in the order book, and they're going to push it in. Right? They're going to hit your order, and you're going to be paying them to fill their shorts. And then that price comes back down to the bottom of the range, and they made a ton of profit, and they just ate your stops. I mean, that's what they do. That's why they fail so much, is because these good traders know that. They know how to read the market. They know what to look for, and they eat your stops, and they make money. So that's just not a good position to be in. Anyway, I think that's all for today, guys. Don't forget to like, share, and subscribe. Really helps me out, stay motivated, keep making these videos. Just kind of something I do in my spare time. If y'all have any questions or any video suggestions, please leave a comment in the comment section below. Take care, friends. Bye.